Your goal is truly to hold assets in extremely desirable areas because those properties go up aggressively. And that's how you build wealth fast.
Okay. But he told me do what he did to get started, house hack. That's how you get wealthy. He said try to get the biggest one you can, try to get a fourplex.
Yep.
Rent out the units. You live in one of the units for, 2-3 years, however long it takes you to build up your little equity. Then what you do is after that you move out of your unit, rent your unit, then move over to whichever other house you want.
Yep.
And that's how and then get another fourplex. He said obviously don't go for 5 because then you're commercial, but
you can go 5, but it's harder.
Right.
It's harder for someone in the beginning.
Oh.
Now for me, I don't even go for because when you go over 4, you can't get a Fannie Freddie loan unless you're buying something that's worth over 1.4 million. Then you can get what's called agency debt, which is a Fannie Freddie loan, which is similar to the loans you get as a homeowner. But in between that gap, that is the difficult part. And it's funny how very few people realize what was the reason that gap was hard. Mm-hmm. Is because you have to go from 30-year mortgages to usually 20-year or 25-year mortgages from local banks.
So it's higher than your payments are higher?
The payments per month are higher because it's a smaller repayment period.
Oh, yeah.
So the deal as a 5 unit has to be not just 20% better than a 4 unit, but has to be more like 35 or 40% better because your payment per month is higher.
Right. Okay, that makes sense. So you can't charge $1,200 for each unit.
Well, the thing is, if the market caps you at that much per month, then you're capped, which makes those deals harder to do. Mm-hmm. Now, what we do is we try to buy the nicest areas. And because we're buying in the nicest areas, those rents could be $2,000 a month.
Mm-hmm. So that's a decent amount. But how do you find, that's another question I had. I found some decent ones in Seffner, which is a country, but anything that's already developed, the fourplexes and the threeplexes and duplexes are normally in a not so desirable area. They're the map just showed mostly MLK.
So this is the issue right now, or the issue always, is that you don't want to get caught into buying into low income or rural areas because the growth there is slow. Mm-hmm. So you can find opportunities to buy distressed assets for a deep discount, then it could be worth it. But your goal is truly to hold assets in extremely desirable areas because those properties go up aggressively. And that's how you build wealth fast. So try to buy something in the highly desirable area because it goes up aggressively. If you're gonna buy in Seffner, buy a distressed asset where you could give it some TLC and then, refi and pull out your equity, or sell it and move on.
Okay.
And then roll over that profit into a property that's in a more desirable area.
Right.
So there is times that I'll buy properties that I don't plan on holding, but I'll just flip them because I'll make some money quick and then roll that profit into an area that is more desirable. Now, the other thing with the more desirable area, initially when you buy them, your profit, your cap rate is lower. So when you are when you're running your numbers, you're like, why am I gonna buy this property with this lower profit where I could buy something in the lower income neighborhood or out in the boonies, or in Seffner where I can get higher return on my money? What you'll find is there is inefficiencies in the market, but overall the market is pretty efficient. What I mean by that is if you buy a property that pays you make a lot of profit from the rent in the rural area, what ends up happening is the increase in value usually isn't that aggressive.
Right.
Where then you find the property in the downtown, the really desirable area.
Right.
Their rents, when you buy the property, the return on your rents are really low, meaning your profit from how much money you spent. So for example, in Seffner, maybe you're going to get 8% on your money for every $100,000.
Right.
Where in the downtown, you might only get 5% on your money. Mm-hmm. So you'd think, wow, I'm going to get so much more money from owning in Seffner. The difference is usually in Seffner or in whatever, the rural area, the property value doesn't go up that much. Where in the downtown, it goes up a lot. So when you account for the cash flow that you're getting plus appreciation, you're gonna end up usually making more money in the downtown. But because it's upfront not as good, people don't buy there as often. So it's kind of like, eating healthy food. It doesn't maybe taste as good, but it's good for you long term. Now both are good. It's better that you eat something than not eat at all. Especially if you're considering the fact that you're going to invest, it's better that you buy something. So yes, if you're going to buy nothing and you're like, my option is nothing or Seffner, then okay, buy Seffner. But if you're going to say my option is downtown St. Pete or Seffner, downtown St. Pete. Now again, you're going to get a lot smaller property in downtown St. Pete than you are in Seffner, but you're going to make it up long term over appreciation.
Yeah, and it's just when he said that the lenders count your rent when they're gonna lend, like they count how much you're gonna rent it out for, anyways.
That's
correct. He said that you could just buy something bigger. Yeah, you might see a $400,000 and be like, oh my god, but because obviously it's my first rental property, it's scary.
When buying a rental property, try to buy the largest property you can get. Don't worry about how much money you're making from your W-2 alone, because if you're buying a fourplex, living in one unit and renting out the other 3, the bank will actually use the rent from the other 3 units to be added to your income to calculate affordability. So if you think my income doesn't justify the 4-unit by myself, that's fine as long as the other 3 rents are significant enough to have the total income from your income and the 3 rents to be enough to pay for the mortgage.